Hey everyone, welcome back. Today at Chip Stock Investor, we're going to be talking about Aehr Test Systems and their recent quarter's earnings update and some news that has the market wondering what happened. And I apologize, we're undergoing a studio change. I think this always happens when we talk about Aehr Test Systems. So less than ideal conditions, but we wanted to get this update out to you and our take on what's going to happen with Aehr and what that means for the automotive industry and silicon carbide, gallium nitride, all that good stuff.
Yeah, Casey, why don't you just run through the numbers here from the latest quarter? Let's start there, huh?
They gave us quarterly numbers, and then of course they gave us the half year that ended in November of 2023. Revenue for the quarter was $21.4 million, which was an increase 45% year over year. GAAP net income of $6.1 million, slightly over 29% net profit margin. And then for the first half of the fiscal year, Aehr grew 65% over the same period last year to $42.1 million. And GAAP net income was $10.8 million, up 149% and nearly 26% net profit margin. So all of that showed great growth for this company, but CEO Gayn Erickson told us some very candid bad news. Nick, what was that?
Yeah, the full year outlook for fiscal 2024 for Aehr, that ends May 31st, 2024, just under 5 months from now. Previously, the outlook was for revenue of $100 million, growth of at least 50%, and GAAP net income of at least $28 million, which was supposed to be at least 90% net income growth. We sort of sounded the alarm late last summer on the company's valuation, and now it's even more egregious here. You know, we got the sell-off here before this earnings update, and now it's selling off again because now the full year outlook has indeed been reduced all the way down to 75 to 85 million in revenue and a GAAP net income margin of 20 to 25%, or about 19 to 21 million. So not terrible. I mean, this company is still going to grow year over year, but the second half of 2024, it looks like that growth is going to be put on a pause, a hiatus, and we don't know how long that will last. Could this last beyond this fiscal year into June, July, August of 2024? That's what we don't know at this point. And I think that's why the market had another bad reaction to the earnings downgrade. Although I think this maybe took some by surprise, I think that's really what the market is now looking at is, will this downturn for Aehr and the automotive market overall last longer than this summer? The earnings that are expected for Q3 and Q4 of fiscal 2024. So Q3 will be the period that ends in February, and then Q4 will be the period that actually ends in May. So based on this guidance, basically what this implies is revenue of about 15 to 20 million in each of the next 2 quarters, which is a sequential decline, of course, from the figure you just rattled off, Casey, 21 million in quarterly revenue in Q2. And then net profit is probably going to decline to about 5 million, roughly, in each of the next 2 quarters. Again, a sequential decline. Just to reiterate, this company is still expected to grow at a pretty decent rate of 30% year over year, but this is far, far, far below where everyone was expecting it to be, that 50% revenue growth or more and 90% net income growth or more for the fiscal year. That's the issue. That's what everybody's worried about now.
In recent months, we talked about with OnSemi, they accounted for around 90% of Aehr's revenue last quarter, and they reported a single OEM automotive manufacturer was reducing its demand for silicon carbide chips. And as a result, instead of 1 billion in expected full year 2023 silicon carbide chip sales, OnSemi reduced its outlook by 200 million to 800 million total in silicon carbide sales. And so CEO Gayn Erickson said this was a very recent change in the outlook for Aehr Test Systems. He said in the last 60 days, we have seen the slowing of the growth rate of electric vehicle market has had this negative impact on the timing of several purchases from some of their customers.
Yeah, and to be clear, Casey, this is interesting because we own a bit of OnSemi stock. We like that company and its ambitions in silicon carbide. But this was the issue. OnSemi actually reported on October 30th, so a little over 60 days ago now. And actually, that is when they reduced their full year guidance. This was a big, big warning to everybody that we called out the end of last year because almost 90% of Aehr's revenue at this point is tied to OnSemi. That's far and away their biggest customer. And this is where we get a little bit confused as to why the market didn't see this coming. At any rate, there have been a number of other more recent reports that indicate this downturn for the automotive segment is getting worse. Just our last video, we talked about Mobileye, we talked about ST Microelectronics, Microchip. You can also check our last video on Wolfspeed, ticker symbol WOLF, that we talked about towards the end of last year. That company is very ambitious, trying to construct multiple silicon carbide fabs. That's one of Aehr Test Systems' newest customers, but Wolfspeed is managing a cash crunch. And so it looks like they're pushing off the delivery of their orders from Aehr until next fiscal year. So after May 31st, 2024, maybe June, July, we don't know yet. So a lot of headwinds here causing some upstream issues for Aehr.
It's also been stated by some semiconductor executives that there is a potential for these excess inventories to last until mid-2024. This story should sound familiar to all of us. This is a 1-year lag from the PC and smartphone market, which has finally hit its bottom and is playing out very similar to that same market. So that begs the question, what happened? Why is there this downturn? EV demand and digitalization of cars, of course, continues, but demand growth has slowed a bit. Higher interest rates are finally taking their toll on the consumer. And at the same time, lots of new semiconductor manufacturing supply has come online in response to the chip shortage of late 2020 to early 2022. Many OEMs have built up an excess inventory to avoid a repeat of the shortage, but now they have too much inventory and they want to conserve cash in this tougher economic environment.
Yeah, this was Microchip CEO's issue on their last earnings call a couple of months ago. He kind of called out some of his customers as doing exactly what you shouldn't. You overpurchase chips during the good times and pay a higher price as a result. And then you freak out when the economy shows the slightest sign of deterioration and stop buying chips when prices decline. Whatever. That's just the name of this game. So I guess the question now at this point, Casey, is what's it to Aehr Test Systems? This is a semiconductor manufacturing equipment provider. They don't actually make the silicon carbide chips themselves. They just make some equipment that is growing in importance for the manufacture of silicon carbide. That's the question, because you would think if there's all this future EV demand, chip makers still need equipment from Aehr to expand their capacity. Well, we've got a little illustration for you.
I made this very rudimentary picture to hopefully illustrate this analogy that Nick has in regards to the upstream, downstream analogy in the semiconductor industry.
If you follow the oil and energy industry, you hear this terminology used all the time, upstream versus downstream. But we think this still applies to the semiconductor space and really anything that is tied to manufacturing, production, and ultimate sale of product. So what this is referring to is small changes in demand among consumers. Let's call that the mouth of the river, the big giant part of the river. Any small changes in the flow, in the demand or supply to consumers can ripple upstream and have a very dramatic, big effect on base level suppliers, the small streams that feed into that big river, so to speak. In your illustration here, you've got EVs, the big automotive industry at large, let's say, global automakers, looks like on track to sell about close to 90 million vehicles to the consumer market in 2023. At least that's the preliminary estimate, close to 90 million. A lot of those are EVs, of course, digitalization of cars, advanced driver assist systems, so on and so forth, more chips needed. the demand has slowed a bit. It hasn't stopped, but new demand has slowed a bit. And suddenly we have all these excess chips in inventory. And so chip makers suddenly have to deal with this problem. And so they need to conserve their own cash as well. And so they stop ordering new equipment. That ripples all the way upstream to a company like Aehr, which is one of those small little streams that feeds into the bigger river.
For a small specialist company like Aehr, it's a small upstream company. And it may not take a lot for the water to get flowing again, right? Maybe the Beaver's dam breaks and it flows into the big river. We may be taking this illustration too far, sorry. But the EV industry balloon of the last few years has really catapulted this company into investors' consciousness. And with that downstream market, the consumer gobbling up cars, the river was running wild upstream for Aehr. But now that the downstream market has slowed, consumers are not purchasing as many cars as they used to be, and the waters are starting to back up for Aehr. The Beaver built the dam again. So Aehr's customers are having to adjust their orders accordingly, which is pushing out some of the purchase orders for Aehr, and that revenue recognition is getting pushed out further into 2025.
So I guess ultimately the lesson here is semiconductors are the infrastructure for the digital economy. So they still go through cycles. Aehr and semiconductors in general are not software businesses. They do not grow up and to the right in a straight, smooth line. We're hitting a cycle here. Again, just to reiterate, and I think this is something not only Aehr CEO Gayn Erickson has reiterated, but all of the industrial chip makers, the IDMs that we covered, especially in that last video just a couple of days ago, have all reiterated the expectation here is this is a temporary pause for their growth trajectory. We just don't know how long it's going to last. Maybe we've got another 6 months to go of downturn. Maybe we have a full 9 to 12 months left, kind of like the PC and smartphone market got delayed a couple of times until finally bottoming in, looks like maybe end of Q3, beginning of Q4 2023. We don't know yet. We don't know how long this excess inventory will get worked through. But at this point, I'm just going to stick a mid-year 2024 plus or minus 3 months target on it. Fair enough?
What's the valuation for Aehr right now? And are we looking to buy some more? Stock dipped quite a bit, so it looks very appealing.
That's the danger of looking at just stock price though, right? If we update the model based on the new expectation for GAAP net income for fiscal 2024 ended in May, it looks like as of the after hours movement, let's put a market cap of about 550 million on Aehr, plus or minus 20 million or so. This thing's going to kind of go haywire for a while. But let's say 550 million market cap divided by about 20 million in expected GAAP net income. Stock trades for about 28 times expected earnings for the current fiscal year. It's still not cheap. I think it just underscores how ludicrously overvalued this thing had gotten over the summer, over last summer and into the early autumn months. So it's still not cheap. As you probably know, if you've been here, or maybe you're a new viewer here, we sold all of our Aehr stock through the end of last summer at well over $40 a share. We logged a very, very quick, well over 100% gain on the stock, which is crazy. But we sold it, and then we started DCAing back into it in early November after OnSemi's report that clobbered Aehr stock the first time. So it's a DCA plan. We are keeping this position very small. We've been nibbling every month a little bit since November. And at this point, we see no reason to stop now that the stock has gotten taken out again. So bear in mind, though, this is going to be a very small position for us. We're DCAing at little bits at a time, and it's still a small cap stock. Again, if you're a new viewer, our take on small caps, they need to be bought in baskets. Let's say at least a couple dozen of them to be well diversified, because statistics are not on your side if you just buy a few small cap stocks and pile large chunks of your portfolio into them in the hopes that you hit it big. Sorry, but the statistics, the data says you're probably going to underperform the market overall at best over the long term. Now, this is if you're a long-term investor, not a trader. So that's the small cap game. We're keeping this a very small percentage, like less than 1% of our portfolio, as part of a basket of small cap stocks that we own. So this thing is not for everybody, certainly not going to be for the faint of heart. The stock price is going to continue to be very, very wild until this automotive/industrial chip market finds a bottom. But buying during the cyclical downturns is kind of the way you have to go with semiconductors. It's kind of counterintuitive, but that's the name of the game.
Yeah, this is just what we're doing. Of course, we can't tell you if this is an appropriate purchase for your portfolio and when to buy it, but we're going to keep this a very small position. We like Aehr Test Systems. We like CEO Gain Erickson. If you haven't had a chance, we can't cover all of the great comments that he made in the earnings call, but if you have a chance and have some time, you can listen to it. Great stuff. We'll keep an eye on it.
Yeah, and if you want an update on the technology itself, it's been, I think, at least 6 months since we've done a video on this, Casey. It is interesting technology. It's new, at the very least, a new application of semiconductor equipment addressing this new silicon carbide market. So hit us up in the comments if you want another video outlining their technology, all of the use cases for it, and why the opportunity for their equipment still could have room to run at some point in the future.
That's a wrap for this episode of Chip Stock Investor. As we stated at the end of last year, after an epic rally in chip stocks in 2023, first half of 2024 is going to be harder. So remember to focus on quality, diversify, and buy for the long term. We'll have an update for you on Lam Research and a brief take on Supermicro Computer and ARM Holding. So look forward to talking about those companies. Make sure you hit that subscribe button, don't miss a video, and have notifications enabled. Thank you so much.
See you guys soon.